Hey, BiggerPockets, it's Matt. Today we're going to talk about the 2% rule. Everybody talks about the percent rules. So I'm going to explain what this is and talk about how you're not going to achieve it unless you do a few specific things. It's almost a unicorn. It's one of those things that a lot of people talk about, but you never actually get to. It's something to strive towards as an investor, but it's very hard to get to, but if you do, it's a great deal. So here's how the 2% rule breaks down. So 2% rule says that if I buy an investment property, I should be getting back 2% of my price in rent per month, okay? So we'll talk through a quick example. What that means, so 2% of my price should be coming back in rent per month. So here's a very simple example. The numbers are going to be a little smaller, but they could expand out and go much bigger, so bear that in mind. Let's say you buy a property for $50,000. Okay? At the 2% rule, okay, that means you should be bringing in $1,000 a month in rent. Okay? Now, here's how that breaks down. This is how good of a deal the 2% rule is. Because if people use this, you shouldn't use just the percent rules, by the way, as your acid test and evaluation only. You should delve deeper into the numbers. People think, oh, 2% rule, that's what I'm aiming for. Here's how good of a deal 2% actually is, okay? Not saying you don't need it, but let me show you how sweet 2% actually comes out to be, right? Now, let's pretend that you're at let's see, you're going to multiply this $1,000 a month by 12, okay? And that's, of course, going to give you $12,000 per year in net top-line revenue. Now, I'm going to take away, again, I'm kind of shorthanding this, but you guys will follow me. I'm taking away 5%, I'm multiplying it by 0.95 to take away for vacancy, so 5% vacancy rate. And I'm also going to take and put a pin in that. We're going to come back to that on vacancies, right? But let's say 0.95 for vacancy, and I will take away 50% for an expense ratio. Now, single-family homes might be less. Single-family homes might be 30% expense ratio, meaning for every dollar you receive in rent, you're going to pay 30 cents for expenses, or up to 50 cents. The 50% applies more to small multi to mid-sized multifamily properties. The 30% might work for single-family homes. But either way, that's your expenses with everything but your debt service. So everything but your mortgage payment, that's what you should allocate for expenses on the property, okay? So you take those two things out, and on this deal, again, I'm cheating a little bit because I did these numbers ahead of time, so I can give you guys a quick look here. That amounts to roughly rounded to $5,700 per year in what? What do you guys think that's called? That's called net operating income. Okay, now that's pretty good. Just based on a $50,000 purchase, going off a cap rate, and again, I know these are small numbers, so if you guys are really talking cap rate and talking net operating income, you should be talking about bigger properties than single-family homes bought at $50K. But this rule extrapolates up into way larger properties as well. So if you're making that per year in net operating income compared to this, you're at 11.4% cap rate. Okay, people talk about, oh, it's a 5 cap, it's a 6 cap. If you're at the 2% rule, on a 50% expense ratio and 5% vacancy, you're at 11.4 cap, just so you know. That's how good the deal is. But it doesn't stop there. Let's go a little further and apply some debt to this and see what kind of cash flow you make at the 2% rule, okay? Now, I take this, and let's say I lay $10,000 down of this, and I finance $40K, okay? $40K financed at 4.5%, okay, on a 30-year mortgage or 30-year amortization. Doesn't matter whether it's fixed or not. Even if it's 30 years, you can have that rate locked for 5 years if this is a way larger commercial property and there's a couple more zeros up here, right? So that's a good way to say it. You guys can add as many zeros to this number as you like, and the 2% rule still applies, okay? So that debt service is going to cost you $2,400 per year, okay? And it's going to put $3,300 per year, and you could even say per unit. So if you bought a property at $50,000 a unit, that's bringing in $1,000 a month per door, you'd be making $3,300 a year in cash flow per unit. This applies to single family home, or this applies all the way up to way, way larger properties as well. This applied to your $10,000 that you put down is a 33% cash on cash return. Show me where else you're making that, right? So that's how good of a deal the 2% rule is. Okay, people strive for it. Oh, it's 2%, 2%. You guys don't realize how good of a deal it actually is. You can make money at way less than 2%. I actually strive for somewhere around 1.5 to 1.75% rule. You know, but that sounds a little more complicated and it's a lot harder to say than just 2% rule, right? So this is how good it is. Now let's talk about ways that you guys can achieve it. Some of which I recommend, some of which I don't. And I've got some bad news for some of you guys too. So, okay, here's ways that you can get it. Number one, don't recommend this one, but you can get it. And some people fall into this trap, is you can invest in D or C minus neighborhoods, AKA war zones. You can buy a property for $30,000. You can buy a property for $15,000. Just odds are it's going to be in a lower economy neighborhood. It's going to be an area where there's probably going to be a way higher vacancy rate than this, than 5%. You could be looking at 10 to 15% vacancy or more, right? You may have higher maintenance costs because tenants are going to move out regularly. They may trash the place. You might have higher collection issues if you're in one of these war zones, right? So just issues are collections, maintenance. Okay, so these properties are a trap, okay? The reason they're a trap is you get trapped by just looking at the numbers. If you just look at the numbers and say, oh my God, that's so cheap. I could buy it for cheaper than the price of a car. I could buy a house for $15,000, $20,000, right? You could. Doesn't mean you should though. There are landlords. Now, that being said, there are landlords that are excellent landlords of D and C minus properties, okay? You got to question whether or not you are one of those because you got to know how to deal. You got to have really great systems in place to place proper tenants. There's people that live in these neighborhoods that are very happy, because the rents are probably a little lower and everything like that. But if you see a deal and you're buying it just on the price and just on the 2% rule spread, oh hey, it's going to be good cash flow. Question the neighborhood. Do some research on the neighborhood around it and everything like that. For you new investors that are just getting going, be really careful of investing in spaces like this, especially if you're doing the management yourself. Here's the next one, okay? The other way that you can achieve the 2% rule if you try really hard, or get very, very close to it. You can be a hands-on investor. Okay? Now, here's what that means. That means probably not a turnkey deal. If you guys have turnkey providers that are throwing 2% rule stuff at you, ding, 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 right? That's probably where those properties are. If they are throwing this stuff at you and you question the numbers, I'll bet you they're nowhere near that in your expense ratio. They're probably sitting around 20, 25%. If they're quoting you a property that's performing anywhere near this cash flow wise. So question the expense ratio, question the vacancy rate, question the neighborhood. If you're a passive investor that's getting somebody throwing a turnkey deal at you that's anywhere near performing like this, cross-reference it with one of these things. Okay, I believe in hands-on investing is a great way to get to this, and here's a few reasons why. Okay, you can get, say, off-the-market deals. We'll talk about each of these things. You can do wholesale construction. I'll talk about that, and that's that. So real quick, off the market deals. If something's listed on the MLS that's an on the market deal, even if a wholesaler has it or something like that, and they're shopping it by a few other investors, if it's not in one of these, and if these numbers are correct, and they're pitching it as a 2% rule, it's not going to last on the market for any more than a day, okay? So there's so much competition out there right now. So many folks want to get into this game or already are into this game and see a good deal know a good deal when they see it. It's going to get snapped up quick. So if you can find yourself an off-the-market deal, either by doing some marketing of your own, doing mailers, cold calling, getting first look at properties. I wrote an article for BP a while ago about how to get first look on properties, meaning you're the first one, like realtors call you before they call anybody else. It takes a lot of networking to get there, but you can. So get access to off-the-market deals when a 2% rule property hits, that you jump on it and get it under contract quickly. Once you vet it out, comparing the expense and the vacancy ratios in the neighborhood, right? If it checks all these boxes, then jump on it. And that's how you get access to these things. But you got to be hands-on. If you're doing passive investments, you're probably not going to get that phone call unless you're really, really plugged in. You got to be really, really plugged in to get access to this. Wholesale construction is really, I think, the way to go. And that's buying property. Let's say my end-all cost on a property is $50K. I want to get it up to. I want to spend no more than $50K on a property. If I were to hire a retail contractor to do the work, I could buy a property for, let's say, I could buy the property for, say, $25,000. Again, add zeros if you want. Okay, $25,000, and the reno work from a retail contractor would be, say, $50,000, right? To do a full gut reno of the property, replace the roof, replace kitchens, really, really trick it out, make it really, really rent ready and nice and bulletproof so that your tenants can't mess it up too bad, and to reduce your expenses as you run the property. You're going to be at $75,000, which isn't quite at the 2% rule. But if you are hands-on, not hands-on as in hammer and nails, but hands-on as in very active in your business, you can find ways to get this work done on a wholesale rate. So working on your contractors, finding ways to leverage relationships, joining the home, like a Home Depot or something like that, and getting a discount at Home Depot or a discount at your big box stores for your construction materials. That's one way to do this. Finding ways to leverage discounts and leverage relationships and stuff like that to get this reno number down from 50 down to 25. Okay? You've got to be hands-on as an operator. Again, not a guy. You don't have to be the guy beating the nails. If you are, then you might be able to get it even lower than that. But if you're hands-on in operating your business and really tight with your relationships, you can push your contractors and leverage relationships to get these construction numbers down so that you can be all in for this. But if you're doing this passively, hands-off, you're probably going to pay a higher number, or you're probably going to pay a hands-on guy like a turnkey operator or whoever to, a margin to create this for you, and you're going to pay more than this number. So bottom line, here's the bottom line here. If you are passive investing and looking to go somewhat hands-off with this, you're going to get diluted somehow, and you're probably not going to achieve the 2% rule. The ways you're going to get diluted is a contractor is going to charge you a little more, and then you're probably not going to get wholesale contracting rates. A turnkey guy is going to get a hold of you and charge a few extra bucks on selling you the turned around completed asset when he's done with it. Or you're just going to buy something on the market after it's been picked over by folks. So you might not achieve this. But if you try hard on these outlets, this is how you get to the 2% rule. It's a challenge, but it can, as you can see, it can be very rewarding. So I hope this is a benefit to you. Please leave lots of comments and questions below. I'd love to get into some conversations with you guys about the 2% rule, maybe about deals you guys have seen, maybe about other pointers or tips you guys may have. So thank you for watching, as always, and I appreciate you guys, and have a great and profitable week.